Good afternoon and welcome to our weekly livestock market update. I'm Brownfield News Anchor reporter Megan Grebner. With us is University of Missouri's Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, let's start first and talk a little bit about the WASDE report released today. Anything that we really need to take notice of that report?
So I don't really think we got any big changes out of the WASDE report today, and I say that relative to what we see for 2017 livestock production and prices. When you look at cattle prices, USDA has up their range $1 on both ends, so maybe a little stronger cattle prices than where they were in the November report. I think much of that is associated with what they see now as slightly more than 200 million pounds less more beef coming to market in 2017 than they had forecast a month ago, which, as we've talked about for a long time, less meat supplies is nothing but a good thing. But when you look at some of the other markets, they really didn't show many changes in those markets relative to where they've been. No change in terms of pork production or chicken production. Pretty tight barrel and gilt price range. They say 39 to 41 for this December WASDE. That's not very exciting, number one, price-wise, but a pretty tight range for this far away from 2017 being done.
It has been pretty exciting this week is watching the hog market, really another big week. Let's talk a little bit about this price moves and what's causing that price support, especially as we keep talking about pushing capacity and reaching maximum capacity on our shekel space.
Yeah, so, wow, what a great week in hog markets, number one. When you look at the prices that we've seen, cash hog prices up $3 or $4 relative to where we started the week. When you look at futures prices up $7 or $8 for the week as a whole, what some phenomenal strength that I don't think many of us would have anticipated. A couple of things, I guess, that kind of comes to mind for me when you look at the processing capacity issue that we've talked about for a number of weeks now. The further we've gotten here into 2016, the less of an issue it appears we are under at this point now. We are seeing still large runs of hogs, and that's why I keep saying what phenomenal prices given the level of hog runs we've had. When we look at the week, I think this is kind of the sixth highest week that we've had for a long, long time, and so record or near record, I should say, pork supplies, yet prices have been moving higher. Just tells me that as most folks think we're going to get by this very tough shackle space situation, they're willing to bid prices a little higher. I am not going to suggest we can get a lot more strength relative to where we have been of late, but it is a very nice run in hog prices.
We've talked a lot, Scott, about risk management on the livestock side of things. When we're seeing price support like this on the hog side, do producers need to take advantage of this and maximize as much return on investment as they can?
Well, I do think that using risk management tools is not a bad strategy. Can markets go higher? Absolutely, they can. I always remind producers that if you're worried about markets going higher, maybe you don't want a straight futures contract. Maybe you want to use options, but doing nothing and watching those prices be higher and then erode away, again, is a risk management plan that doesn't work very well. So I encourage folks, number one, if they don't know their production costs first, it's hard to know whether you're locking in any kind of reasonable return. So you got to get that side of the ledger figured out before you go any further. And so at these kind of lower prices, when we get run-ups, being able to at least maybe market a portion or forward contracting a portion or using options to protect a portion might not be such a bad strategy in the markets that we're in today.
Scott, let's talk a little bit about the demand side as we look at the hog numbers and those prices. Are we looking at we're growing demand elsewhere? And is that where are we seeing this extra demand for pork?
Yeah, well, I'll say, boy, it's both when you look at what we've been seeing happen in terms of hog prices, or it must be both. We did get some consumer confidence information out this month, and for December, we're up 4.5% relative to a month ago. Just some very, very strong numbers, and I think it's been amazing to watch consumer sentiment over the last several weeks as it's grown stronger. Really post-election, it tells me that probably getting some lift in terms of domestic demand that we might not have anticipated earlier. And again, consumer sentiment getting near the peak we saw back in 2015 is nothing but a perfect answer to what are very large supplies of meat in this country, and pork in particular. Yet on top of that, we look at the export side of the market that's also been helpful to pork markets. We look at October pork exports, a little over 200,000 metric tons for October. The largest monthly volume of muscle meats, at least since March of 2014. So that bodes well for where we're at. I think we've seen a lot of markets beyond China be very important on the pork front. When you look at the beef export volume, it's also up for October about 106,000 metric tons. So both of those things for me give me some reassurance that maybe we can keep prices from moving quite as low as we might have thought otherwise from both, again, domestic and export demand.
Scott, when we talk about that consumer confidence number, and you mentioned how drastic of a change and a jump it's been month over month, does some of that go along with maybe the strength that we're seeing also in some of those economic indicators post-election?
So I think it has to. I remind folks all the time, I believe the Dow today closed somewhere near 19.7. Who would have thought, given where it was pre-election, that we'd be where we are today? So a lot of things very interesting occurring. And again, I think then it makes consumers more confident, and it may come at a perfect time in terms of holiday spending season. And so it's been a very big change in how consumers seem to be feeling about how things are going to unfold ahead. Now, for a minute, I want to remind us that's a lot of expectations as well. So current markets have been good, but there's a lot of expectation we're going to continue to get better. We need to realize that expectation as well as we look ahead. So we can't kind of go, well, we're good and we don't need to worry about the economy anymore. We still need to see that strength continue for the next several months.
Scott, we've talked a lot about hog prices today. Let's talk a little bit about beef prices. Pretty flat, but is that necessarily not good news or bad news?
Well, we have taken a little breath in cattle markets for the week. We're down pretty much on cash markets. Calf prices down anywhere around $5, depending on where we are in the week. Futures fairly flat when it's all said and done for the week, it looks like. But again, we've gotten a nice run in cattle prices as well. So we got some bounce. I think many of us had been expecting some bounce seasonally. I think part of that's associated with where we are seasonally in these markets. But taking a breath for a week maybe is not necessarily something that's catastrophic. Again, I think as we talk about risk management, another market where when we get these run-ups, I just keep saying the supply side continues to suggest to me that there's downside risk, and taking advantage of positive weeks is something that we really need to be thinking hard about.
What are some other things that we need to look at also when we're looking at the numbers on the beef side of things?
Yeah, so I tell cow-calf producers right now, this is the not so fun part of the cycle. I recently looked at some data from USDA that looked at production costs for cow-calf producers, which we don't have any real current data, but data from about 7 or 8 years ago would suggest that there's about $300 a cow difference from low cost to high cost producers when you look at total operating cost. And that's the difference between staying in business long term or not, because we know those that are at the highest end of cost are the ones that are likely could have to exit the industry at some point along the way. So making sure that producers, number one, know where they sit on that operating cost line, because I will joke with them all the time that I've never met anything other than a very low cost cow calf producer. Yet I know there must be some other types out there around the country. It is just critical to focus on those costs. We let a lot of expense creep happen with very high returns, and the cost side of the equation is what one can have the most effect over right now. And that's where the focus needs to be.
Scott, anything else this week?
I think we've covered the major topics for the week, Megan.
One last thing, quarterly Hogs and Pigs report is out here in a couple of weeks. Anything that are we looking at maybe another readjustment from USDA possibly?
Well, we certainly are going to look at pig crop and what USDA does for the second quarter of 2016 pig crop revision. It seems to me, just given the runs we've seen, we might likely see, yes, another revision for that quarter of more pigs as we're seeing pretty large runs as we finish 2016. I'm really interested to start to see what's going to happen on the sow inventory side. We're going from a capacity situation this year where I don't know, somewhere around 2.45 million head a week if we talk about a little more than a 5-day work week. And that's going to go up to something closer to 2.6 or so. And so what's that really do in terms of, do we got more sows coming? Or are we going to be fairly flat? Because one could tell a pretty positive story that processing margins will thin a lot as we get into 2017, as packers have to chase hogs a little bit harder, given we've got more capacity. So sow numbers for me out of that report are going to be really important on top of what kind of revisions we're getting in that pig crop data. So going to be critical in setting the stage for pork markets in 2017.
All right, Scott, we will talk to you next Friday. Have a good week.
Thank you very much, Megan. You too.
As always, if you have questions for Scott or myself, you can visit brownfieldagnews.com and submit them there. You can also subscribe to have our weekly livestock market update delivered to your inbox every Saturday morning. I'm Megan Grebner on Brownfield.